gentlemen, K here with the Traders Club. Welcome to the market update. I hope you guys had a good week this week trading. Not a whole lot has happened since the last Friday market update. I think that was, what was that? That was last Friday, was 22nd of February. So just right here, that was last Friday when we did a market update. So we're just pretty much in that vicinity. Today, let's continue with our updates here. We're gonna be looking at Spider, Diamond, Qs, IWM, Semi, and the banks, and we'll call it a day. First, let's look at things quickly. There isn't a whole lot to talk about too much today, so hopefully we'll keep this video short. Just overview and just seeing what's going on here. Let's look at a 65-minute chart, the hourly here. We've been looking at this chart here for some time. You can see that moving average. I think that's what that is. Pretty sure that's 50 EMA, right? We can actually make this low just to accommodate this low there and some of these lows here, and you can see how we've been respecting that level ever since it gapped up above it back in January 4th. And ever since then, we've been throwing out these gaps here. This was a island reversal there as well. This was a slight island reversal, which really didn't play out, but let's make that anyway. So you can see there are many islands that we saw. We had actually... This was actually island top also. This was actually small island top. So there's been a lot of shenanigans. There's a little bit of island bottom there. There has been lots of gap downs. We've been, respecting this rising 50 EMA, setting it low on this 65-minute chart there. Let's zoom out a little bit. And obviously this is the most anticipated resistance. And this is probably the level where a lot of bears are hoping to see a significant pullback. And that has been the question last several weeks here. Are we going to see a pullback here? And something we've been discussing through these videos is that I think we may not. We may see some short-term shenanigans or short-term pullbacks here, in which we are seeing a short-term, just very tiny short-term here. That 10 EMA is still acting as support. You can see the 10 EMA there, and that's 20 EMA, and that's 50 EMA. So I think we could keep grinding higher like this, and we may pass over it. I guess obviously at this point we are extended. That doesn't mean it cannot go higher. The odds are slowly, diminishing for the bulls. But again, that does not mean that it cannot go higher. Obviously, the odds are just based on a statistical probability. And for as far as the statistical probability is concerned, to even see after 20% decline, V-shape being right back up, seeing another 20% within 2 months, that was a low probability. So we saw low probability pullback, which we talked about last couple of weeks, that seeing 10% higher correction within a 1 year, because this was 12, remember, in January 2018, and then late October, November, December, we saw 20. So seeing 10% plus correction within a 1 year, it is about 5–10% probability of happening. It's very, very extremely rare, but it happened. And then we saw another very, very extremely rare thing happening is this, right? You see a 20% corrections very, very fast like that. Most people are going to anticipate double bottom, consolidation, or some sort of reversal pattern. Nobody really expected this thing to go straight up, right? So I think at this point, at this juncture, what's happening is a lot of people who might have went cash down here with loss, they're it has been exhausting for them. Not only has it been exhausting for those people who went cash with the loss, but people who's been shorting, it's been exhausting for them. That's these little tiny moves, right? Those little tiny moves, that's what really kills them, right? Because if we see some big gap ups and big moves, then maybe bears will be scared out. But now we're just seeing these little tiny up and down, continue to eat up away from the bears' rear estate. I mean, now we're not even a bear's territory anymore, right? We talked about in the last market update video. And this is what really killing them. And so what happens is many are very anxious. Like, are we going to pull back? Are we ever going to pull back? Or is this thing is going to go straight up to the new all-time high and continue to move higher like this? And so I think there's this, what's going to happen is a lot of people who missed out on this move, or a lot of people who maybe, raised cash with loss, I think they start chasing it. Maybe when bears are finally turning back bullish, I'm not sure about that. But what I think is a lot of people who missed out or closed out with loss, they're starting to get back in. And then that kind of slowly making bears to squeeze. And so we're seeing some short squeeze happening. And with that psychological aspect, and with the how much momentum the bulls have built, in the last 2 months, I think there's a chance it could keep grinding higher like this. When you actually look at a weekly chart, we're not at overbought yet. We still got some move here. Last time back, as this was 2016, this thing came back before we're pulling back here. We at least tagged 93 level, right? This is a stochastic. And you can see how we're about at 82 level today. We are not yet at 92. We've been talking about this for a couple weeks now. So let's go back to the daily chart here. And with that, in that process, the bulls have opened up a lot of gaps. That gap's open. That green box was the island reversals. That gap is open. That's a big gap. Those gaps are open, and bulls have built so much momentum here. There's no way we're gonna come down and retest 230. I don't know if there's still bears who are still thinking. I mean, there are bears still thinking there's gonna be 60 coming a spider, which is stupid things I've ever heard, because they've been saying that for 2-3 years, missing out entire move, right? Like, I mean, think about it though. Do you really care if seriously, do you really care if the market is manipulated? If the market is rigged? You guys go to casino. You know casino is rigged. You know the odds of you winning. It is a very, very, very minimal. But you guys go to casino knowing it is rigged. So when you come to the market, I'm not saying it is rigged. I'm not saying it's manipulated. It's just that's what bears say all the freaking time. But if it is actually rigged and manipulated, and if you know it is, because bears actually always talk like they are rigged or manipulated, right? Well, why not participate and profit from it if you knew it was rigged? They like to call it a bubble. Okay, if it's a bubble, well, remember 1990 to 2000, the biggest bubble ever? Why not participate and profit from it? You see. Well, they don't know. they just say things because they've been losing, right? They don't know. That's why they always like to justify their losses instead of blaming themselves with the bad trade, bad investment, bad calls, and bad expectation, and bad, direction, and bad analysis. That's the only way to learn, ladies and gentlemen, is to admit your loss, admit you're wrong, and say, how did it go wrong? Because the market will tell you. The market in your account will tell you if you're wrong, right? He will tell you. So no matter how long you're going to fight about it, moan about it, well, it ain't coming back, right? So market is bullish, obviously, and there's plenty of videos you can watch that I've done in the long term, the secular trend, the macro analysis videos you can watch, and why I'm bullish, why I think the biggest bull market ever in history is coming next 10 years. And I've been pretty much the only bull who's been extremely bullish and emphatically, publicly bullish since early 2016. I'm not here to be, friends with the bears. You know what I mean? I'm not here to say, okay, here's a bullish case, there's a bearish case. I want to be friend with the both bull and bear. I want everybody to like me. No. I'm here to make money. I'm here to profit from the market, right? I'm not here so I can gather more followers on Twitter or grab more subscribers on YouTube channel. That's not my goal. Funny what these traders do, right? They all became marketers nowadays. If you don't like this video, please like this video, share it with your friends. Please do not share this video, do not like this video. Please just unsubscribe if you don't like my tone of my voice. Because my genuine followers know what I'm about. And I'm not trying to be arrogant to be sake of being, being cocky. That's not what I'm saying. You guys know this. It's not about me trying to be cocky. It's just, think about it though. If you know where you're going and somebody trying to pull you away, right? Let's say you know where you're supposed to go. You know which road you're supposed to be going, right? And some guy is keep telling you the other way. But you know the other way is a dangerous road and the other way is a road for destruction. Are you going to be like friendly with this guy? And if he keep pushing you to that direction, maybe there's mines. Maybe there's a hidden danger. Maybe there's a hidden, bomb or something. And he keep trying to pull you that way. What would you do? You're going to punch that face, right? No, don't pull me there. That's what I'm doing. That's what you have to do because there's so many voices nowadays with the internet being so prevalent, right? That's what you have to do. You got to pull away from these stupid information. And it is very, very difficult to find because real information, the truth is hidden. Because there's so many wrong informations out there, right? And especially, market tends to fool the majority. And if you want to follow a majority of people who follows, because think about it, if the market fools the majority and majority people loses money, but those majority people are voting up, following people and make them an expert, quote unquote expert on Twitter. That's why they get high followings, but they are voted up. There's no regulations who tell you, well, yeah, that person is definitely know what he's talking about. No, they've been voted up by a majority. That's why they got high followings, high views. You see what I'm saying? So by following those people, well, you're going to be majority. And majority people always lose money, right? And this is how I like it. Anyway, we're still here, and there's not so much to talk about today. So I guess I spent about 10 minutes there with my rant, but it's always nice to kind of, share with you guys. And I love my platform here, and I think you guys listen to my videos for these kind of truths, right? Let's go to diamond. It's not a whole lot. I mean, it's still a 180, man, 280, and we may see some shenanigans, but I expect. I mean, I've been unloading some of my aggressive strategy positions, right? At these levels. I mean, after 20% move, yeah. I mean, you're gonna unload some, but I'm still holding some. Where if it continues higher, then I'm gonna start to unload some more, and then prepare for about 5% decline, so I can refresh. I can start to prepare for reloading some new fresh positions for a higher move there. Obviously, we got this kind of a channel thing going on, but it really wasn't a channel because why? We broke below it, but that became a massive, massive bear trap. And now I think, I think great years coming next couple of years, 2-3 years, maybe 4. Diamond was only up just couple percentage from the all-time high here, retesting the, the good thing about diamond. Let me get rid of this. Man, you know what? I was going to make this video short, but now it's going to go my usual time, which is about 20 to 30 minutes. That gap, that tiny gap has been filled. There are no more gaps. So we got really, really, really small gap. That's probably not even going to count anything. There's no more gaps left for the bears. Bears, you got nothing. You got nothing at this point. You got all your little stupid fundamentals, all your little 1929 versus 2019 stupid overlaying charts that you've been doing since 2013 is useless because nobody has ever, I mean, what you're trying to do is trying to win a jackpot on a slot machine. That's what, anybody show you 1929 chart or 1930 chart, overlaying it with the 2019, right? What they're trying to do, they're trying to win a jackpot in a slot machine. That's what they're trying to do. Is that what you want to do? And then when they don't win it, you know what they do? What they say? It's rigged. It's manipulated. Of course. This jackpot is manipulated. You're not going to win it all the time. Nobody's going to win. Once in a while you win it, but man, what is the probability of that? 10 EMA is holding there. And very, very impressed, this thing coming all the way down up here. We no longer have lower high. This is what you call equal high. We talked about it last time. The perfect inverted head and shoulder. Is this what's gonna happen? I don't know. I don't believe so, because I mean, it's just it may happen. I say if it does, I'll be buying this dip for sure. But it may not. And even when it does happen, I have a feeling it's going to make it very, very tricky. Like it might come down and then go up and then do something. And then like, you know what I mean? It's going to be like, maybe if it does happen, we may see inverted head and shoulder on the right shoulder, but through another inverted head. That's possibility where we have left shoulder head, right shoulder. So we got like a big inverted and then right shoulder form with another inverted, because we need people trying to buy this dip for them to kind of get scared out with the lower low, and then that's a possibility. Let's kind of wait on that until we see some evidence of this pulling back. If not, let's continue to be bullish here. Let's go to Nasdaq. Oh, Nasdaq filled this gap here. This gap is now filled. We got 2 more gaps to fill. I think Nasdaq is getting ready to fill all of those gaps. Again, Nasdaq's been kind of, you know, slowing down a little bit because those gaps been slowing it down, because a lot of times when those gap gets filled, it does act as short-term resistance. We got this gap to fill, this gap to fill, that gap to fill. All those gaps gonna get filled sooner or later. Here we're still holding that 10 EMA, and we you know, clear that resistance. It's been continue to move higher, riding that 10. Just looking at my other screens here just to make sure if there's anything else I want to report. Again, same thing on the Nasdaq here. I mean, you go to, I don't know why this thing all did that. We go to hourly here. This is actually 65 minutes. That moving average is still holding as support. So that will be a short-term guidance there. Just because we break below it does not mean it's going to straight up tank, because we slightly went below here. But that at least in a minor thing, a micro thing, you can look at that and say, okay, as long as we stay above it, it could continue to grind higher. Let's go to Russell 2000. Russell 2000 finally have cultivated equal highs, just like Spider and Diamond. Q's only one have not yet, because Q's need to reclaim this level right here, right? About 178, 177 level. That's the last lower high. So need to reclaim that to make equal high. Spider Diamond have done that. Russell 2000 just have done that last week. Really, just prior resistance now is equal high. That, we don't know. Maybe higher and then pull back. I think that might be more like a more likely scenario. Let's go to semiconductor. Semiconductor found resistance here. This is downtrend resistance. Semiconductor has to come down, come up somewhere here to about 109, 111 to make that equal highs, and then going higher. Then that might be a perfect scenario in a perfect world where we got this downtrend resistance. You got the horizontal resistance. Go up here, tag it, you know, equal highs, pull back a couple of times, and then, you know, prior downtrend resistance acting as new support, and then breaks higher. That could be the scenario for the semiconductor there. One last one, XLF. I'll let you guys go with this. Banks, pretty similar situation here. Let's actually make that like this so we know that that was that epic trap there. So banks is still most vulnerable look here because we're still actually technically still in a downtrend intermediate term here. You can see lower highs and lower lows here. We got a lot of level to kind of, you know, the 28 needs to be reclaimed to at least neutralize this downtrend into it in kind of a sideways thing. We're not in a sideways thing yet. We're still we're working with falling channel. Remember, spider is working with rising channel. Remember that? Right here. You get that? I mean, again, it's not a channel, guys. This is not a channel because we did this, but I'm looking at it in a different perspective. It's not a textbook channel, obviously, because of this. But if you look at this as a trap, then you can look at that as a, you know, kind of a. But regardless, we you know, you can see we made a higher high, right? And we got right back into it. But banks, we got lower high. So that in itself is a divergence there, and it's much more of a vulnerable look because of the lower highs and lower lows here. That for that to be nullified, or let that downtrend to be nullified, neutralized, we need 2911 reclaimed, and then potentially something like that. So I'm still waiting for something like that to happen, and we got this little bit gap there, and that's kind of where we're struggling. 200 SMA in that vicinity, that's been slowing things down, as you can see, that 200 SMA there, and the gap area. So a lot of times the gap area is going to give some struggle, or it's going to make things a little bit hectic as this price get up. But I think sooner or later we're going to feel it. I think maybe next week we'll feel it, get up here, and then maybe a little pullback. So, and there are a lot of stocks, as I scan a lot of the stocks, there's still a lot of stocks trying to break out, and I think that is going to help the indices to continue to climb higher next week. You know, I think, you know, we saw a little bit of pullback. We didn't see a whole lot of pullback, as you can see in 280. It's not a big pullback. We just saw a little bit of 3 days of bull flag, maybe a micro double top. I don't know. Maybe we come down to retest 276 and then hit that 20 MA. But I think there's a good chance, even if we do that, there's a chance we just kind of go right back up here and clear above 280. And the next target will be about 290. Again, like I've been saying for about, you know, since early January, the best case scenario is 300. Best case scenario is 300 with the short-term pullbacks, you know, like short-term pullbacks. Before we see much sharper. That's the best case scenario, 300. 290, I think, is possibly doable. Maybe next week or next couple weeks. But let's continue to be, let's continue to give benefit of the doubt, to the buyers, and this has been a great V-shaped reversal, and I think people are gonna know, and when they look back, they're gonna realize that this has been the most epic V reversal ever in history. I think that's gonna be what it's known as. So anyway, you guys have a wonderful weekend, and good luck trading next week.